India Inc. is on a roll. Improving corporate confidence has provided a massive impetus to deal activity in the country. A recent EY report is suggesting a 63% jump in the value of total mergers and acquisitions to almost $8 billion in just the first 3 months of 2016. And what's prompted this sudden spike in M&A activity is what we're here to talk about. Will this space continue to bubble or will it fizzle out? I'm Vikram Oza. You're watching the special show Merger Mania, where we decode the surge in acquisition action among Indian companies this year. Let me introduce you to our guest. Ajay Arora is head of M&A at EY. Rajendra Nalam is partner M&A at BMR Advisors. Raja Lahiri is partner at Grant Thornton. And Rakesh Valecha, senior director at India Ratings and Research. Gentlemen, thank you for joining us on the show. Let me begin by talking about what has been a high-octane period, if you look back in history, between 2005 and 2007, Ajay, when we saw these large, big-ticket deals like the nearly $13 billion Tata Chorus tie-up, Hindalco's $6 billion acquisition of Novelis. How do we compare the outbound M&A scene in India as it stands today with that period?
So Vikram, 2005 to 7 was largely characterized by big-ticket outbound M&A, which was primarily due to asset availability and the availability of leverage at a multi-tier level.
Right.
However, if you look at the M&A landscape over the last quarter or so, over the last 12 to 18 months, it's largely driven by domestic M&A. And domestic M&A has been triggered due to consolidation opportunities available, where the larger corporates, which have been stressed by debt, have been selling assets to deleverage their balance sheets. So primarily, that's the big shift from outbound M&A to domestic M&A as the biggest driver in terms of the share of the pie of the overall M&A activity. I think the second piece, which was not really playing out 2005 to 7, which has played out in the recent past in a big way, is inbound. Inbound is again a theme which is, influencing most of the segments or most of the sectors like, pharma, like manufacturing in a big way, infrastructure, technology. So that's another key driver which is influencing the recent spurt in M&A over the last 12 to 18 months.
Raja Lahiri, why don't you come in on this? As far as debt financing is concerned for outbound deals in India today, and I'm specifically talking about outbound right now, the permissions to use external commercial borrowing, they've eased from 2005 onwards. What's the situation as you see it right now?
No, I think first of all, as rightly pointed out, I think, there is clearly different drivers today. I think debt financing is not easy, as we talk about. Clearly, it's not an easy thing to get debt for an acquisition. I think, having said that, I think clearly if you look at certain sectors, for example, pharma, been very, very active on the deal front, and these are all large outbound acquisitions. Lupin did a pretty large transaction. Sun Pharma, etc., have been very, very active. So I think depending on the sectors, I think, acquisition financing would be available. There would be obviously larger corporates, assets, which would be available, and they would go for those kind of larger transactions. That's one part of it. I think the second part of it is that, again, rightly pointed out, the domestic play is quite different. However, on the domestic play front, I think clearly quality assets would get good corporates bidding for that, and that would mean debt financing, and that would also mean private equity kind of backing those kind of deals.
Sure.
So I think the key theme is sectors will play an important role in terms of some of these transactions, and second is quality assets would lead to availability of finance. If it's not quality, I think that would be pretty challenging for corporates to get acquisition financing.
But, we've been through a period of caution with outbound M&A deals. The period when, other than Bharti Airtel's acquisition of Zain Africa for nearly $11 billion in 2010, and now when we are seeing this kind of resurgence in M&A activity between 2014 and now, companies by and large, they chose to look inward at domestic M&A. I want to understand from your legal perspective, what has really changed as far as you see it, Rajendra?
Right. So from a tax and legal perspective, I think a few things that have improved. One is that I think the government is definitely making efforts to bring in more clarity in terms of what are the tax consequences of transactions. There was a lot of debate and furor around the whole issue about companies selling shares and whether it's capital gains or business income. I think government is making a lot of efforts to bring clarity on that. So that is one important step. I think the other changes that are happening overall across the entire regulatory framework, if you look at it. One is from a Companies Act point of view, we've moved to a new Companies Act, which is settling in. There's a lot of feedback that has been taken, and that's a very important aspect for transactions because Companies Act governs the entire gamut of how companies are working. Secondly, CCI and that entire process around how transactions get monitored, how they get looked after, they get tested for adverse impact on competition. I think that's also fallen in line nicely, and that's moving on. Sure. From a reporting point of view, because it's really important for transactions to get an accurate sense of what kind of numbers the company is actually doing. We moved to a new, stronger accounting framework, and that is already in force now for companies above a certain category in terms of net worth. So that is also already kicked in. So overall, I would say that from a tax and legal point of view, companies are able to take a far greater conviction on the kind of transactions they're doing, what kind of numbers they're looking at, and what are the legal and tax consequences of a transaction.
Rakesh, I'm wondering whether you agree with all the points that are being made by Rajendra over here, and also when you're talking about the entire M&A activity as it stands right now, are you seeing a lot of it being driven by the deleveraging exercise that many companies have launched? They want to clear their books, and that's where we are seeing deals. Even when you look at today, we were talking about JSW Energy, JSPL, the possibilities that exist. Are we going to see a lot more of that, according to you?
Sorry, you're asking me?
Yes, I was. Rakesh?
Okay. Yeah, sorry. No, I think you're absolutely right. I think the deleveraging story has a role to play as far as some of this M&A activity is concerned. To a large extent, I would say it's now becoming a bit more visible, primarily because I think the banks are kind of pushing it quite aggressively. I think the kind of levels of stress that you're seeing in the banking system, I think, is pushing some of these banks to ensure that the corporates who are leveraged use some of their good assets to be sold out and use that money to realistically reduce the overall debt on the balance sheet. I think on the other side, from a demand perspective, from people who are actually buying some of these assets, they're also looking at opportunities in terms of not only increasing their market share, but also seeing visibility of some structural changes which are happening on the ground. So probably some of these M&As are happening in sectors like power, in roads, where probably some of these structural changes hopefully will provide better visibility of revenues, and they're hopeful that with these acquisitions they'll be able to generate returns to satisfy the kind of equity that they're putting into some of these assets.
Ajay, what's your own view on this? Because there's always a stigma that's attached to selling assets in India. It's more pronounced than it is abroad. How much of that really comes in the way of good M&A activity? If you can share with us some examples on this count as well.
So I think traditionally we were always used to Indian entrepreneurs never selling their businesses and treating that as family silver.
Yes.
But I think in the last 5 to 6 years we've seen a radical shift. I think we've seen a shift both in terms of acceptance on the behalf of the Indian promoters to sell their businesses to large global buyers, because I think it's primarily driven by an opportunistic view on the business where the next generation is probably wanting to do something different. And you know, if you can get a great valuation from a global buyer, then you're flexible to at least explore that window and see if you want to transact with that global buyer.
Yes.
So I think some of these transactions, which are top dollar transactions, you know, where Indian entrepreneurs are selling to global buyers, are happening on a regular basis, and that's a trend that's playing out. I think the second piece is the stressed assets piece.
Yes.
Where, you know, the corporate balance sheets may be stressed, but there could be certain you know, buckets of businesses overall in a conglomerate's business which are doing well, have a quality asset base, have a decent cash flow, and hence those are the pieces which can be monetized. Sure. And because those pieces can be monetized, they would traditionally not want to do that. However, I would like to add that I think the banks have just increased the amount of pressure on some of these corporates, and they are also playing a key role in terms of driving some of these corporates to sell some of these cash flow generating assets to generate money and reduce the debt on the balance sheet.
We're seeing increasingly that kind of push by banks, but Ajay, you think the focus is on generating value? You talked about the current kind of valuations that we're seeing. Is it on the creation of scale? Because that is important as well to many companies, especially when you're looking at the outbound kind of transactions.
Yeah, so I think outbound kind of transactions is largely, if you look at the buyer landscape and the buyer mindset, it's become very cautious. It's a very different mindset what you saw from 2005 to 7 and what you're seeing today. So today I think you're looking at quality assets, you're looking at minimum leverage on those, and it's largely pharma and tech companies buying these assets globally. These are the two guys driving outbound M&A, and in these two sectors, if you look at these balance sheets, they have free cash. Right. So there's no stress to take leverage, or there's no stress on the cash flow. So that's on the outbound side. Right. On the domestic side, if you look at really the cash flow situation, I think the buyers have a luxury of choice. If you look at a lot of these assets getting sold because of stress on balance sheets, you really have very few buyers in India for these assets, and they have multiple assets to select from. So I would say today it's a buyer's market in a lot of these domestic consolidation opportunities.
Sure. In fact, I was going through your report, Ajay, and I want to take this to our other guests as well. For the first quarter of 2016, it seems the technology sector is really dominating the volume with 33 deals. And if you look at a majority of these deals in the recent past, it seems to be specifically in the big data analytics and cloud service segments. Rakesh, I want to get in your perspective as well. What are the factors at play over here, you think?
No, I think as is rightly pointed out by some of my colleagues on the panel, I think clearly it's the cash flow generating ability of the entities that you're trying to acquire that I think is becoming much more visible at this moment. So in sectors like technology, where you can kind of see that visibility of cash flows and where you think leveraging is not going to be a challenge, I think those are the assets where companies are trying to kind of get into. It's also getting into new areas where you probably don't necessarily have the expertise today and you want to build in some of the latest technologies into your portfolio. I think those are the assets which are typically getting into the M&A activity much more proactively compared to some of the old historical kind of infrastructure or manufacturing sectors that probably are still a bit more leveraged today.
Sure. Ajay, when I'm looking at this report also, I'm considering the possibilities that exist because a lot of companies are strengthening their mobile capabilities. Are we going to see a lot of churn there as well? Because there are a lot of smaller players creating apps and such. Are we likely to see a lot of consolidation on that space? Is that something we can expect in the future?
Yeah, I agree with you, Vikram. I think clearly in the mobile app space, clearly in the e-commerce space, I think what we are seeing now is that capital, early stage capital is getting scarce with every passing quarter. And I think investors are getting more and more selective. I think they also have the luxury of supply. So I think given that background, you expect to see a certain amount of consolidation in this space, and that will probably drive the next wave of M&A in the mobile app and the e-commerce space.
Rajendra, I want to get you in on this as far as, because we're seeing so many deals on the tech front, I want to understand from the legal perspective again, by way of facilitation, why are we seeing so much activity? Is it relatively easier to get the legality sorted out over here? What's really driving it?
Right, so I think a bunch of things are happening on this, Vikram. I think if you look at it, the principal legislation that governs investments by foreign companies into India, which is the entire FDI policy of the government. So that has progressively over time continued to become more and more facilitative for investors. So if you looked at it, there is a lot of a very important circular was recently released around the entire framework governing companies engaged in e-commerce and online trading of goods. So I think these are steps that the government is taking to ensure that the environment for investors in India is improving. Right. Let me give you another example. If you look at the amendment to the MMDRA, which is the Mines and Minerals Development Act, yes, there again there was a huge question mark around transfer of captive limestone leases, right? So now the government has recently approved it. We now have a statement that came out perhaps a couple of days ago saying that M&A activity on this will now proceed because this transfer of leases is now permitted. So if you look at what it means for very large transactions, for example, if you look at the JP and Ultratech transaction in the cement space that was announced recently, so almost a 20,000 crore transaction. Now, in deals of this volume, if the legal aspects around transfer of limestone leases or any of these issues are not clear, or if the continuity of benefits or the continuity of rates are not so clear, then I think it's a huge showstopper for the M&A activity. Similarly, outbound transactions that I think my colleagues on the panel and earlier you were also alluding to, if you look at the Sun Pharma Novartis transaction or if you look at the Wipro Health Plan transaction, all of these again are based on the premise that India is permitting its Indian companies sitting on large cash chests to be able to make international investments, to provide a very clear framework on how these investments need to be structured, how they ought to be reported, and what is going to happen going forward as well. I think all of this clarity and perhaps going forward, from an operating point of view, GST, etc., will also come in. And as and when those come in, I think it sort of improves the entire environment. You will see transactions happening more and more. For example, insurance was another sector where we were at 26% for the very longest time.
Yes.
Again, the government's moved that from 26 all the way down to 49, and you will see more and more partners. For example, Aviva Dabur increased their stake, moving up all the way to 49%.
Sure.
So all of these triggers from a legal or a policy point of view are going to continue acting as a big booster for M&A transactions.
Well, we'll have to watch that space very closely. But like we were talking about the deleveraging exercise, I've seen the two largest divestments in recent times, the JP Group selling 6 of its cement units to Ultratech, Reliance Infra selling its cement business to Birla, both targeting at reducing debt on the books. We'll talk a little bit about that. And of course, we talked about JSPL and JSW Energy, which have been in the spotlight. Are we likely to see more on this count? And which are the other sectors that are going to be in focus as well? And what's the government's role going to be? They have revised the minimum threshold for mandatory notifications of merger and acquisition deals. How exactly is that helping? All of that is what we'll discuss in just a moment. Do stay with us. We'll be right back. Big buzz in the mergers and acquisitions space. What's really driving it? That's what we're discussing with this eminent panel we have today. The government, of course, like I was saying before the break, having revised the minimum threshold for mandatory notifications of mergers and acquisitions. It says for one that firms, either the acquirer or the one being acquired, with minimum assets of 2,000 crore rupees or a turnover of 6,000 crore rupees, must notify the CCI of the Competition Commission of India of their M&A plans. Besides, of course, there are other thresholds for global firms and companies. I want to understand from you, Rajendra, how does it help, especially with transaction costs on smaller deals?
Right. So I think 2 or 3 important things on the entire CCI framework. Naturally, the intent of the law is to look at transactions that have a material or an appreciable adverse effect on mergers or combinations that are actually going to be anti-competitive or which are going to have an adverse impact either on consumers or the overall the market. All countries across the world have antitrust rules, and this is entirely commonplace. India's introduced the entire CCI regulations. I think going forward, what will be very important is that as we have greater clarity on the kind of transactions that do not need prior approval, or transactions that merely need an information, or transactions that are able to claim exemptions, as we build up this entire precedence in terms of transaction precedence as time goes by, this is one of the most important tests that that bankers and companies that are going to engage in transactions are going to look at and see that are we going to pass that smell test of the CCI, and whether transactions that we're going to engage in are going to get stuck in long delays and protracted exchanges, trying to prove whether something works or not. If this legislation can be very clear and the entire process can be fast-tracked and we have a clear set of exemptions which evolves over a period of time, I think all of these steps will go a long way in improving the environment for mergers and acquisitions. It will cut down the time that it takes for engaging mergers and transactions. Smaller transactions which have no real major impact do not need to get delayed.
Sure.
And they can get through very quickly, which also means lower costs of the transaction. It also means that there's far greater clarity and control on timeline of a transactions, because often shareholders and creditors are waiting for transactions to get completed so that there is visibility. So I think all of these steps can go a long way in improving and accelerating the transaction speed in India.
Fair enough. Raja, I want to get in your view on Pharma. The largest deal announced in this quarter was Sun Pharma's $293 million acquisition of those 14 established prescription brands from Novartis in Japan. It gets Sun Pharma into the Japanese market. In the light of, Tata Steel's sad outing in the UK with Chorus, what is the sentiment really, and how do you think the situation on the ground right now is really altering by way of the government's moves? What sound you're hearing from them in terms of being able to allay fears in terms of what Indians are trying to do by way out of outbound acquisitions?
I think one needs to draw a very clear line between the efforts that the government is making.
As you said, Pharma has been a very, very active sector.
Go ahead, sir.
Yeah. So I think, talking about Pharma, I think Pharma has been clearly a sector where we've seen pretty large deals, including Lupin as well as the Sun Pharma transaction. But I think, as you rightly said, outbound acquisitions is not just about acquiring through scale and acquiring the customers. I think a lot is to do with how do we handle people. And I think clearly, some of the examples that we have seen in terms of divestments and some of the challenges that Indian companies have faced to manage some of these acquisitions.
Yes.
So I think people and how do you manage labor unions, and the visibility of managing some of the large ticket acquisitions becomes very critical. And I think to that role, Indian companies, I think one of the key issues have been how do you sensitively manage divestments as well? Because some of these acquisitions, obviously, clearly we have seen that haven't really worked out as the way they were planned. And obviously there's going to be a flurry of activity in terms of people actually looking at divestments.
I'm talking about a flurry of activity. Ajay, why don't you comment on this? Because there is going to be a lot of activity on the M&A account when you're looking at the possibilities when there are these private equity exits. And this is across sectors, not least of which is going to be pharma and tech. Do tell us how things stack up over there.
Yeah, that's right, Vikram. I think private equity exits are going to be a big theme that's going to play out over the next couple of years. Last year was a big bang year for private equity investments in India. We had, if I get the number right, around $19 billion of private equity investment in India, which was probably the biggest year after 2007 or 8. And if we look at the cumulative investment over the last 4 to 5 years, all that has to be exited. And, if you look at sectors like healthcare, if you look at sectors like manufacturing, technology, life sciences, there is a lot of private equity investment that has gone in. So I think you will probably find significant activity around some of these private equity funds, looking at exits over the next 12 to 24 months. My view is that overall, a lot of these funds are today talking to the entrepreneurs and talking to the companies to try and see if they can do strategic transactions in these investments that they have made. Secondly, there's a big trend towards a lot of funds trying to do buyout transactions. And as the quantum of buyout transactions increases in the market, that will again act as a catalyst for big ticket M&A activity happening in the country.
Right. So much buzz currently and much more to expect in the future. This is our discussion. Gentlemen, thank you for joining us with your perspective. Of course, the more we talk about M&A activity in the country, there is so much more that springs to mind as well. But I'm afraid we've completely run out of time. Thank you indeed. We'll see you soon. Goodbye.